Hello and welcome to this week's Market Outlook webinar with me, David Jones, and Aondo Markets. If you're watching the recorded version, it was held live on Wednesday, June the 14th at 12:30 in the afternoon. So we run this webinar every week on a Wednesday lunchtime, and it splits down into a couple of things. First of all, we take a look at some interesting markets to watch to see where the opportunities might be in the days ahead, and also spend a bit of time on trading strategy, so different trading ideas every week, maybe some indicators or some money management, that sort of thing. And this time around, we're going to look at where to take profits. I think a couple of different approaches that you might want to think about using, and some practical examples, I think, from me as to how these approaches have worked for me and do work for me in the past and now. So I've got the risk warning up there, which hopefully everyone can see. I think that has been up there for long enough for now. So let's flip over to the trading platform. So we're using Aondo's platform, Trade Hub. I thought we'd start off, as it's the Wednesday after the general election, which was of course last Thursday. I thought we'd take a look first of all at the pound US dollar, because I'm sure plenty of you were watching the markets on Thursday night when the polls closed on Thursday, and we had that exit poll at 10 o'clock, didn't we? Bang on 10 o'clock, and it suggested the Tory seats were only going to be around 314, I think, from memory, because I remember tweeting that seems far too low. But there's the reaction in the pound that you can see there. So just before, the pound was trading around about 129.60. Then in pretty short order, this is an hourly candle we're looking at, but it didn't even take 5 minutes, to be honest, to go crashing off a cliff. Here we go. So within 10 minutes or so, it had gone from 129.60 down towards sort of 127.20. So it lost 240 points just on the back of that exit poll. And then we did see, you know, as we've seen with the US presidential election, the referendum vote last year, the EU referendum vote, plenty of volatility through the night as the market's thinking, well, is this quite right? You know, the market, it bounced back from 127.20 up to sort of 128.20, 128.30. But as the results came out, and I think we were saying last week that a hung parliament was going to be the worst outcome. When it started looking that it might go that way, clearly we saw the pound push even lower. But saying all that, I think it's left us with some interesting levels. You know, I've talked in the past about the importance of these big levels. I think after last week and also this week, we've been left with a really obvious line in the sand. Let's stick on the 10-minute chart for now. So we saw the market, what's this, early hours of Friday morning, sort of punch down towards 126.40. Then stage big rally back up towards the 128 mark. So quite a big effort off that level. But then already twice this week we've come back down. 126.40 earlier this week on Monday, that would have been 126.40 again, near enough in the early hours of yesterday. So we really have been left with you know, quite the line in the sand for pound against the US dollar, and it's the 126.40 level. So clearly, even though the market got battered down to there as those results were coming out on Friday morning, the overall opinion so far seems to be there's some value down there, you know, and we've rallied all the way back up towards 128 again. So it does suggest, if we did see some weakness back down sort of below 127, that maybe we want to think about being a buyer. We could have a quiet afternoon today because, again, I'm sure you're aware, later on this evening at 7 o'clock US time, we've got the latest 7 o'clock UK time, sorry. We've got the latest pronouncement from the US Central Bank, the Federal Reserve, and they are, I think, highly expected to raise interest rates this evening. So we could see all markets, I think, sort of marking time until we get that number out. But maybe there'll be something they say in there that will be a catalyst to put a bit of pressure on the pound again, or a bit of strength for the US dollar and push the pound lower. And I think this 126.40, 126.50 level is one to watch. So I think that's a really interesting one. And of course, tomorrow, Thursday, we've got Bank of England at 12 o'clock tomorrow, interest rate decision. No changes expected. But again, if they say something about the economy, if they give hints as to when or when not they're going to raise rates, we could see some volatility for the pound. So again, I'd say if you're watching the pound, just keep an eye on that level. But taking a step back, it's been an exciting week in terms of volatility for the pound against the dollar, but it doesn't change this trend that's been in place now since January this year. There we go. So if we plonk our trend line on, so for me, the medium-term story for the pound is still one of recovery. We are a long way away from that trend, don't get me wrong, and the trend's coming in about 123.5. There's good pockets of support just below 124, so there's definitely the scope for the market to sell off and still be within that trend. But I think the immediate level to watch, you can see on the daily candles how many times 126.40 has been tested, but I think the bias for the pound is still up, and famous last words, I think we'll see sort of 134 before we see 120 again. But let's see how that pans out over the rest of this year. So it's it. Exciting few days, thanks to the usual political indecision that we have. Let's talk a bit about strategy. I'm going to flip my screen over and just talk a bit about when to take profits. I think in the past we've talked about where to put your stop loss, when to move your stop loss, that sort of thing. So I think let's talk about when to take profits. So what I'm going to do is my usual scribbling on the screen to talk about this, and then I'll flip over and use a couple of example trades that I've got running at the moment. I think broadly speaking there are two ways of looking at taking profits. I think you either have like a hard target in place, so you buy a market at 100 and then think it's going to go to 150, so you take profits then. Or there may be three ways of doing it. So you set an order to take profits at 150. Let's draw this actually so it can make a bit more sense. If I draw our phantom market, let's say the market looks like that. You buy at 210, 200 is support, and you've got to stop at 195. So let's say your target is for a run back up to here, back up to I don't know, 260. So you think, so whatever it is we're looking at, whether it's a commodity, a currency, or a share, whatever it is, you think, well, this seems like a good trade. We've got potentially 50 points profit in the trade. I'm only risking 15 points, so I've got my 3-to-1 risk reward, so the trade makes sense. So I think there are a couple of ways of playing this. First of all, if we're a buyer at 210 with a stop at 195, when we do the trade, we can put our stop loss on. What we could also do is put our like a take profit, so take profit order at 260, and this I suppose is like the ultra disciplined way of doing it, where you basically place the trade and then you walk away and you just see what happens. But I think for most of us, the psychology of dealing with this might be a little bit difficult, because the problem is, of course, the market might rally as high as 255, so you've nearly hit your target, but the market turns around and you end up getting stopped out at 195. That's not ideal, because clearly here at 255 you're trying to squeeze out an extra 5 points from the trade, but you end up giving back 60 points and coming out with a loss. So I don't think that's the ideal situation. I think the other way of doing it is to have a trailing stop loss. I think we've talked about this in the past, about when to move the stop loss to break even. So just to recap on that, for me, if my stop loss, like in this example, is 15 points away, then I need the market to move at least 15 points in my favor before I move the stop. So if the market needs to go to 225 in this example, then I'd move my stop to 210, to a break even position. And then I think it's just the maths. It's just doing the maths then on the position as it gets closer and closer to your target. So let's say the market moves up to 245. So if I'm fixed on 260 as a target, I've got 15 points left to my target there. But if my stop is still at 210, I'm risking 35 points to make an extra 15 points. That doesn't make sense. So once again, I want to think about moving my stop higher, and this is where things like trailing stop losses can help you, until bang, it gets so near your target that your take profit stop is really close behind it. So if it blasts through the target, you're still in the trade, but if it backs away from the target, you're out, and you've got almost the profit you expected. So I think for many people that's a preferred way of doing it, rather than just blindly placing a stop and hoping for the best. Another approach I've been using lately, and it has had, I think, more success than having a fixed target, but it has been mainly on US shares, and we all know what the US stock market's been doing. The US stock market has been just breaking out to fresh highs. When I put the trade on, I have an idea of the target. So going back to this example, let's pretend this is a US share. So I'm in at 210, I've got to stop at 195, and I've got a target of 260, sort of a soft target of 260. And that makes sense. From a risk-reward point of view, the trade makes sense. And then when the market moves in my favor, as in this example, to 225, I move my stop to 210 to break even. And then all I've been doing then is running a trailing stop loss. So when it moves up another 15 points to 240, then I move my stop from 210 to 225. I don't have an order in to take profits at my target, because then I'll say, okay, if the market then goes to 265, I'll trail my stop loss up another 15 points from here. So it's just this perpetual trailing stop. And I think if you're a short-term trader trading the swings during the day, it probably doesn't make as much sense to do it that way. But if you're trading over the medium term, over days and weeks, given some of the trends that we've got in the moment, particularly when it comes to stock markets, and the Dax has hit fresh all-time highs again today, it can be a way of riding these trends for a little bit longer, or it has worked for me anyway, riding them a little bit longer than I normally would do. And I think you only need, maybe one or two positions that go parabolic, and you're making quite a few multiples of your initial risk. But I think it's been an interesting approach. So I'd say hopefully there's a couple of ideas there about how and when you want to take profits. But for me, in some of these strong trending markets, having this trailing stop is an approach that works pretty well. I'll show you one example that is the perfect example. And I've yet to find another one like this, but this is a trade I did beginning of May. Where is it? It's on the US share Aon with exactly that sort of approach. So it's a really simple. What's that doing? Okay, my screen's going a bit crazy up there. Hang on a second. Let me see. Why's that going so mad? Hang on. I don't know if you can see it on your screen, but I've got lots of flickering going on. Okay, there we go. Right. So the trade I did, this is on the US S&P 500 company, Aon insurance company. So I bought the beginning of May at, I think it was 122. So basically buying the breakout. The thing had been in an uptrend anyway, and it's been sort of banging around 120, couldn't get through, and then on this day here or here, whenever it was, broke out. So I bought at 122 with a stop. The other side, probably below here actually, below 116. So I had a $6 stop on it, which is what, a 5% stop, and an idea of a target of maybe just maybe up sort of the mid 130s. And it has worked particularly well because the market, you can see these are daily candles we're looking at. It's gone up almost every day since I've been in a position. So at the moment, I think I'm about 2.5 times my risk. So if my initial risk on the trade was, for example, 200 quid, the trade's currently up 500 quid. And all I've been doing, my initial stop was $6 away. I've tightened it up a bit since then, but as it moved in my favor, just moving the stop behind. So at the moment, it's sitting at 129. And if Aon breaks higher again today, then I'll move the stop higher. So it's been a pretty perfect example. I've done about another 15 US share trades since then, and I haven't got one quite as perfect as that. But hopefully, I think it does illustrate maybe one of the benefits if you are trading over days and weeks and you get into a trend of just trying to let that trend run, which I think is easier said than done. But trailing the stop up rather than having sort of a fixed hard target is something that can work in your favor when we have some other runaway markets that we've got at the moment for stock markets. So that's the little strategy thing done. Hopefully there's a few ideas there. Let's take a look at the markets again. So let's start off with the Dax German 30 index. So once again, you can see today it hit fresh all-time highs back in beginning of May. It sort of went a bit sideways, traded sideways for a bit. But once again, off we go again. And whenever the Dax, when we have had a breakout, we normally do get reasonable follow through, maybe not immediately, but over the next few days, next couple of weeks. So this does suggest this move through 12,900 that the Dax is off again. And in these markets like this, I think it's incredibly tempting to try and pick the top. I dread to think how much money has been lost by people trying to pick the top in stock markets just this year, as they've constantly raised higher. But if we put our trend on the Dax, it looks something like this. So at the moment, we have to treat any weakness as a buying opportunity. Even if it dropped 400 points from where it is now, it's only dropping back into this support zone. So I think on this market and the US markets in a minute that we'll look at, we have to treat any sell-offs as an opportunity to buy. But that break in the DAX through these old highs does suggest that maybe the next leg higher is underway. And if the market does start to sell off, it is looking pretty overbought. That is not unusual, of course, when we get such a strong move like this in any market. Something like an RSI or a stochastic would go overbought very quickly. But again, we should be looking for buying opportunities rather than looking for opportunities to try and pick the top. We're not seeing this quite yet in the FTSE, but once again, I think the FTSE had a bit of a crazy night on election night, of course. But we did see some of the old supports hold, and I know every week I do bang on about these, but they are so important. The previous big levels on markets. There we go. So that the low from May the 18th. So the market went from 75.24 a couple of days before, 75.30, crashed back to about 73.90, and off it goes again. Election night saw some big moves again off the back of those polls. But once again, the old lows have held, and the FTSE bounced back about 150 points off those out-of-hour lows. So we're not quite at all-time highs for the FTSE. But again, like the DAX and like the US markets that we'll look at in a minute, you can't argue with this trend. This trend that started, well, this bit of the trend anyway, that started after the US presidential election, the other political shocker, keeps on going. And these are markets that are still strong. So again, I think for the FTSE, if we started to lose this old support, which has only been in place for about, 4 or 5 weeks anyway, then we've got maybe more of a bearish case for it. But again, we've got bigger support back here. So any dips on these European stock markets still look like buying opportunities. Let's head to the US. So we've got the Fed, the US central bank, tonight, 7 o'clock, and even as we speak, well, actually it's not quite at all-time highs, the S&P, but this is the S&P 500. We'll look at the Dow in a minute, and as usual, we don't need, let's take the trend off here. We don't need to draw a trend on these markets. It's pretty clear what the trend is. And the trend is up. We get the odd correction like we had last time, was it 2 or 3 weeks ago, where we saw a vicious, inverted commas, sell off in a couple of days, but the markets bounced back and pushed out to fresh highs. Friday was an interesting one for the S&P. It was a really weird move last Friday. I was driving up to Wales and I was sort of keeping an eye on it, and it was very strange where in the first hour of trading we had to push out to fresh all-time highs. This is sort of 3 o'clock, between 3 and 4 o'clock Friday afternoon, and then just completely dumped later in the session and moved back to, I think, a 5-day low. And once again, I'm going to mention my favorite subject, the big levels. I did trade off these earlier in the week. I got out of it too early, as usual. But, we had the level left from Friday at 24.15 on the S&P. It sort of dibbled around a bit. There's Monday and there's Tuesday. Oh, sorry, that's right. Is that Monday and Tuesday? No, that's early hours of Monday and then later Monday during the session. It dibbled around a bit, came within 4 points of those lows, held for a good few hours, and the market's taken off. So when we see the market trade near big levels like that, it gives us an obvious reference point. If I'm a buyer at 24.21, I can put my stop loss the other side of 24.15. And interestingly, we do have one going into this afternoon. So if you absolutely, really, absolutely had to sell short the US markets, you've got a definite reference point for this afternoon. So the market's currently 24.43 and a bit to sell. That high from Friday, that fresh all-time high, I think it's a fresh all-time high, yeah. That fresh all-time high from Friday is just shy of 24.46. So you've got a definite place to put your stop loss. So maybe if we get a shock tonight from the Fed, we will see a bit of a reversal. It moved. How far did it move? It moved 30 points in one afternoon last Friday. So it's not impossible for the market to have a look back at these levels. But if it goes blasting through, it suggests that once again, US stock markets are off to the races. But I wouldn't expect, I think, too much volatility until this announcement at 7 o'clock is out of the way. But there's clearly a big level there to watch on the S&P 500. Let's take a look at the Dow. I think the Dow did hit, there we go. Yesterday, the Dow, and actually now, hang on, what time frame are we looking at? these hourlies again. So the Dow, even as we speak, in the out of hours market, the Dow is moving out to fresh all-time highs. So it's currently trading 21,375, taking out the highs from earlier in the week. Plenty of support. If we did see the market crumble a couple of hundred points, which is what, nothing, it's 1%, isn't it? If we saw a 1% turnaround this afternoon in the Dow, loads of support. Well, where do you start? 21,100, 21,150, 21,180. We've just got layers of support to catch any weakness. So I think, you know, these are markets that have come an incredibly long way since the election. Where did it trade overnight on the election? So it traded below 17,680. So it's currently almost 4,000 points higher than that, and still going up. You know, it's come an incredibly long way, but I think again it's maybe a bit too soon to be sounding the death knell for this strength in US stock markets. So I'd say for the short-term traders, levels to watch this afternoon. So I've changed this now to a 10-minute chart. So for me, it's going to be the obvious stuff. It's like the lows of yesterday, but they're a long way away. You can see here, and this is the first sort of hour of trading, where it drifted off to about 21,270, so 100 points below where we are now. Then it came back to it, had another look at 4 o'clock, and then it just blasted off. So I think we can look at those sort of levels. Then there's the overnight lows, which was set at 20 to 4 this morning, 21,300. What else? So I think this is the big one. If we did see a bigger sell-off this afternoon, back towards the lows of yesterday, to see how they perform. But again, you know, in these runaway markets that we've got in stock markets, there are, I think, so many big levels to keep an eye on, and it doesn't look like this thing is running out of momentum just quite yet. So that's it. Stock markets all bullish, all going to the moon. Pound, I think, is interesting after leaving that line in the sand from the day after the election. And the other thing, I think the other market that we'll have a quick look at, nothing. Well, if we take, you know, the election and everything else out of the equation, is the dollar against the Japanese yen. Because I think on the daily chart it's interesting for maybe a more relaxed view of what's going on in markets. So we've had in dollar yen for much of this year, the story has been of dollar weakness. You know, we've seen the market drift from 118 down to around about 108. You can see it down here, and then the market turned round. That was back in April, and we saw, you know, 600 plus point rally off that level, and it's drifted back again. But just over the last week or so, we've seen some buyers come back in. So maybe, you know, we're due a bit of dollar strength down from these levels. So we're starting to build, you know, maybe the first signs of a trend in dollar yen. Let's flip it over to an hourly chart in a sec. But looking on the dailies, it's being, you know, it's quite oversold down at these levels. If you were playing for the bigger move, a run back up to, I don't know, 118, so an 800-point move from where we are now, we've got our obvious stop, the other side of 108. So you'd have if you were, you know, 250-point stop loss in a trade like that, but you've got potentially 800 points upside. So I think it's an interesting one to watch. If we flip over to the hourlies, maybe it looks a bit clear. It's a bit Chopperama, isn't it, on the hourlies? But I suppose the aggressive trade would be it's just break. Where is it? Hang on, where are we? What's the date? It's 14th. Where's the 13th? So it's just breaking through, as we speak, yesterday's highs. So we're breaking through so far what is a big level from yesterday. So maybe the aggressive trade is a buyer now at 110.27 with a stop under the low from Monday, 109.60. It's still a 60, 70-point stop loss. But let's see what happens. But it's interesting that it had a run up, it's come off a bit, hasn't got anywhere near those old lows, and we're starting to push higher again. So I think dollar yen, if we want to take all the European, Brexit, UK election stuff out of the equation, I think that could be an interesting market to keep an eye on. But we'll wrap things up there. So I think this afternoon, expect a quiet market because we've got the Fed this evening. As usual, hopefully when this Fed thing is out of the way, we'll have a much clearer view of what's going on. I should mention this as well. If Aondo are doing a promotion where if you put 3,000 euros or the equivalent into your account until by the 7th of July, you get access to a 3 markets signal service free of charge. and I think it normally costs nearly €600. So if you want a signal service on charts by an independent company, that's a promotion they're doing. Let's see what happens tonight with the Federal Reserve. A rate increase is expected. Let's see what happens with the pound. Does it drive it back to those old lows from Friday and it holds again? And stock markets are still pushing out to fresh all-time highs. There just seems to be at the moment, famous last words, no stopping them. So it still looks like definitely a buy the dip market there. But we'll wrap things up there. If you have any questions, feel free, drop me an email. My email address is david@tradeafter.com. I also do a social trading, copy trading blog with Aondo, and you can read about that on a real account, and that's www.tradeafter.com. And you can follow me on Twitter for interesting charts and stuff like that during the day. But I think we'll have a quiet afternoon and then back to normal tomorrow. Okay, thanks for coming along. There's no webinar next week 'cause I'm away, so we'll do this all again in a couple of weeks' time, and we'll see where we are then. Thanks very much.